Today, we're going to build something really, really important, your financial future. We're going to give you the actual blueprint, step by step, so you can finally take control of your money. Let's get right into it.
So have you ever just stared at your bank account and thought, wait, where did it all go? Trust me, you are not alone. Managing money can feel like you're trying to navigate a maze without a map, but it really doesn't have to be that way. You know, the secret is to think about it like you're building a house. You wouldn't just start throwing up walls without a solid foundation, would you? Of course not. So right now, we're going to walk through the complete architectural plans for your financial life, one piece at a time.
Okay, first things first, mastering your cash flow. This, right here, is the concrete foundation. If you can get this part right, everything, and I mean everything you build on top of it, is going to be rock solid. And the cornerstone of that foundation, the budget. Now, forget everything you think you know about that word. A budget is not some kind of financial straitjacket. It's a tool for empowerment. It's you telling your money where to go instead of wondering where it went. And that is an incredible feeling.
So how do you actually build one? Well, it's really just 4 simple steps. First, you got to look back. Gather up those bank statements and receipts to see where your money's really going. Second, look ahead. List out those yearly costs that always manage to sneak up on you, right? Third, tally up every single dollar that comes in after tax. And finally, number 4, account for any savings you're already putting aside. That's it. You've now got your plan.
All right, with our foundation poured, it's time to build a safety net. Look, life is unpredictable, and every single solid financial house needs a buffer for when things, go sideways.
And that buffer, that's your emergency fund. This isn't your vacation money or your investment account. This is a dedicated cash reserve for true, unplanned emergencies. That flat tire on the way to work, the unexpected medical bill, or, heaven forbid, a sudden job loss. It's the financial shock absorber that keeps a surprise from becoming a full-blown crisis.
So how big does this safety net need to be? The rule of thumb, the goal is to have 3 to 6 months of your essential living expenses tucked away. Now, I know what you're thinking. That sounds like a massive number, but you build it brick by brick, just like the rest of the house. Every single dollar you set aside is real progress.
Okay, we've got a foundation and a safety net. Now we can start building the walls of our financial house. And this means getting a handle on credit and debt, the very structure that gives your financial life its shape.
A huge piece of this puzzle is your credit score. Just think of it as a simple number, like a grade, that helps lenders quickly figure out how risky it might be to lend you money. A higher score means you're seen as less risky, and that can unlock things like better interest rates and way more financial opportunities.
And this part is fascinating. Look at how your score is actually calculated. A whopping 35% of it is just your payment history. That's literally just paying your bills on time. Another 30% is how much you owe. Do the math. That's 65% of your entire score right there. So if you just focus on those 2 things, paying on time and keeping your balances low, you are already winning most of the battle.
Of course, for a lot of us, that amounts owed piece means we've got to tackle some existing debt. And just kind of winging it, that's not going to work. To make real progress, you absolutely need a strategy.
And really, there are 2 main strategies to pick from. You've got the snowball method, which is all about psychology. You pay off your smallest debt first, you get that quick win, and it feels amazing, it keeps you motivated. Then there's the avalanche method, which is pure math. You tackle the debt with the highest interest rate first, which saves you the most money in the long run. There's no single right answer here. The best plan is the one you'll actually stick with.
All right, our house has a foundation, a safety net, and some strong walls. It is time to put the roof on. This is investing. This is the part that protects you for the long term and really helps your wealth grow into the future.
But first, it is absolutely critical to understand the difference between saving and investing. Saving, that's for short-term goals and emergencies. It needs to be low risk, easy to get to. Investing, on the other hand, is for long-term growth. It definitely comes with more risk, but it also has the potential for much, much higher returns. You really need both in your financial life.
The real magic of investing, the secret sauce, it all comes down to one incredibly powerful concept: compounding. This is where your money starts making its own money. It's the return you get not just on your original investment, but on all the returns that have built up. It starts slow, but over time, it turns into a wildfire of growth.
You want to see it in action? Just take a look at this example of an investor named Alexis. Over 40 years, she put in a total of $120,000. But thanks to the power of compounding, her portfolio grew to nearly $500,000.
That is the incredible power of putting your money to work and just giving it time.
You know, this all comes down to one of the most important sayings in all of finance. You don't need to wait for the so-called perfect moment to start investing. The most crucial thing is simply to get started and let time do all the heavy lifting for you.
So there it is. Your financial house is built. You've got a foundation, a safety net, walls, and a roof. Let's just quickly review those architectural plans one last time with the key takeaways.
So here it is, your final checklist. Number 1, create a budget to tell your money where to go. 2, build that emergency fund with 3 to 6 months of expenses. 3, protect your credit by paying bills on time and having a clear strategy for any debt. And 4, start investing, even if it's a small amount, as early as you possibly can.
Look, this isn't just a bunch of theory, it's a call to action. Building a house starts with laying one single brick. So the only question left is this: what's the first brick you're going to lay today?